All right, welcome back inside our proactive newsroom. And joining me now is John Hartman. He's the CEO of Ascend Wellness. And John, it's good to see you. How are you?
Doing excellent today. Thank you, Stephen. Thank you for having us this morning.
Yeah, excited to have you out today. I know you had some big news out today, and we'll talk about that in just a second, how it relates to the company. But first, maybe just remind everyone a little bit about Ascend Wellness and what you do.
Sure. Ascend Wellness is a seven-state, multi-state operator in the cannabis industry. We are located in the Midwest, Northeast, and Mid-Atlantic portions of the United States. We've been in business for about 5 years, and we've just entered our seventh market 1 year ago, and we continue to expand in this general geography.
Yeah. And just so people understand, in the US, it's a state by state. So you literally have to go, as I mentioned, state by state in order to do that. So you pick ones up as you go. And it actually, I would think for a company of your size, it's a great way to move things forward. So you're not blanketing everything, you're taking it strategically.
Yes, actually, one of the foundational strategies that our company's followed over the last number of years is to really focus on this very discrete footprint. We haven't been the type of company that has tried to establish a flag in many states or provinces in the U.S. or Canada. We're, very very focused on densifying the markets that we're in, and that's one of our primary growth strategies, is achieving the maximum number of dispensaries that is permitted in each of the regulatory states that we're operating in.
John, you've been in your job about a year now, so I'm interested to know your thoughts over this past year and some of the changes that you've seen and really where you see the company now to where it was a year ago.
Yeah, it's been a great year or so with the company, Steve. My background is actually traditional wholesale and retail, with a touch of manufacturing. So I started my corporate career in pharmaceutical distribution. I worked for large retailers like Home Depot and True Value and others. And so the balance of my experience has been, I think, very relevant for the company. Our focus over the last year has been to, as I mentioned, densify our current markets while we're entering new markets. So we're in 7 states, as we discussed. 5 of those 7 states are both medical and adult use markets. 2 of the markets, Ohio and Pennsylvania, are currently medical only. Ohio on the cusp of transitioning to recreational adult use. At any moment now, literally. And then, we expect Pennsylvania to follow in the next year or so. So again, our company's been focused on, very careful and very discrete capital deployment in terms of growing the business, largely through M&A activity in new states that are late stage medical and early stage adult use.
Yeah. Let's talk about the news that was out today. And this was an opportunity for the company to refinance your term loan. And this, I would imagine, takes some weight off of what you're doing and allows the company to really focus on that growth that you've talked about.
Yes, I think that, in any industry where it's a rapidly growing, and particularly in cannabis where it's a new industry, managing the balance sheet is a critical component of our collective responsibility. We have an initial term loan that was due to be either refinanced or paid off next August of 2025. So we're very pleased to be able to announce today that we are refinancing that term loan in the form of a new senior secured notes issue in the form of a bond, which is unique certainly for us, and I think for the cannabis industry in the U.S. And it provides us with 5 years of a 5-year runway to be able to focus on the continued growth of the business and really get the necessary and appropriate attention and resource allocation on the refinance behind us well in advance of actually when the term loan was due.
Absolutely. It makes a lot of sense. Let's talk about the future ahead. I know you have a number of products under the company name, Ozone, some other ones as well. I'm just wondering, are you happy with where you're at product-wise? You mentioned M&A and the importance of that. Where do you see the next 6 months to a year and beyond that? Do you see more M&A activity, or do you like where you're at right now?
So certainly, that's an important question. You've got product in there, you've got growth in there, and kind of what the future looks like. Let me quickly break that down for you. We're very pleased with our our product performance and our brand performance in our three primary wholesale markets. So that means markets where we not only are vertically integrated in selling our products through our own stores, but we have, you know, a number of substantial markets where we're using our grown and manufactured products to sell to partner dispensaries and companies in those markets, Illinois, New Jersey, and Massachusetts. We've just moved from the 4th place with our combined house of brands to the 3rd overall market place with our house of brands. So never happy with where we are, but certainly grateful that Ozone and Simply Herb, which are two of our house brands, have moved to that 3rd position. A lot of focus, a lot of hard work on behalf of the team to achieve that. And of course, we want to continue, and we aspire to continuing to grow our house of brands with the customer base through our own dispensaries and, of course, through our partner dispensaries as well. Steve, the second part of your question was around future growth and focus. I think, you know, it's a big question. You know, critical areas for us are, you know, managing the balance sheet, getting this debt refinancing behind us is a big portion of that. However, we'll continue to focus on cash generation and the importance of you know, standing on our own 2 feet. We're coming off of a Q1 where we had multiple quarters now of generating positive free cash flow. And then on the growth side, we'll continue to focus on building more dispensaries in our existing markets to get to the maximum permitted by law, as well as supporting partner stores in a number of those dispensaries so that we can completely leverage the substantial investments that have made in our cultivation and production capacity.
It sounds like it's pretty exciting times for you and the team, John. Thanks so much for updating us on where you're at, and congratulations on the news today. And it should be a very interesting next 6 months to a year and beyond that as well. So appreciate your time. Thank you.
Steve, thank you very much. Appreciate it.
All right, there's John Hartman, the CEO of Ascend Wellness.